Richard Donnell, Director of Research at Hometrack. Welcome. A pretty mixed report, really, isn't it? All through and through, but I suppose the underlying theme, just more gloom.
It's not looking great on the demand side. I think over the course of the year to date, we've seen demand fall up by 11%. We've seen supply rising at double the rate. The supply-demand balance is now moving out of kilter, and I just think prices have been under continued downward pressure.
Why is that demand and supply differential that you're seeing now?
Well, we saw a big recovery. Demand bounced back strongly in the first part of the year. With that brought an increase in supply. But I think over the economic backdrop, concerns over real household income growth, employment, etc., is now starting to feed through into two monthly falls of demand.
But of course, we've got the big bright spot, which continues to be London. Now, what are the main reasons for prices managing to actually increase in the capital rather than fall along with the rest of the country?
Well, London sees a lot of overseas international demand coming in, which really offsets the weaker domestic demand. A lot of the growth's coming in central London, and London has really sort of flattered the overall house price headlines for the whole year. And
you have actually seen a big difference in the number of foreigners actually coming into the market. Why are they doing it? Are they actually seeing property prices as a safer investment, somewhere better to put their money?
They see the UK as a great place to park their money when there's global uncertainty, despite low yields, and that's what's really keeping the market going.
Isn't the big problem as far as the housing boom or bust in this country is the banks and lending? They are ultra cautious. If you're a first-time buyer, unless you've got a wad of cash, and very few people do, it's very difficult to get on the housing ladder. Until that changes, this is going to be a depressed market.
It is, and I think what we've actually had is house prices remaining relatively high. The market's found a way of operating against a backdrop of low turnover, and we're really not going to see a real recovery in prices until first-time buyers come back into the market, and that's really off the back of improved mortgage availability.
And let's take a look at the rest of the year, only 3 months left, and moving into 2012. What are the trends that you are predicting?
We expect house prices to remain under downward pressure into next year, largely off the back of weak domestic demand, supply remaining high, and I think as transaction volumes start to fall, we'll then start to see an acceleration in the number of decrease in prices.
And even if interest rates are still at 0.5%?
Yes, even still with interest rates remaining low.
OK, Richard Donnell from Hometrack. Good to talk to you. Thanks very much for joining us on Bloomberg today.